right, so let's get this started. Yeah, this is Florian from the Q Blockchain project, and it happens that I'm also an enthusiastic Bitcoin member. I'm a proud Bitcoin holder. I believe in the asset, so I'm very honored to talk about this today because we focus a lot on Web3 and Ethereum here, on and Solana, etc. So I'm honored to host a panel, All Shades of Bitcoin Staking, and I would like to first introduce each of the ask the panel's members to introduce themselves, talk a little bit about the project, high-level idea, and then we will dive into more of the details.
Should I start?
Yeah, please go ahead.
Hey everyone, my name is Nick. I'm a strategic advisor to Stroom network and investor into Stroom network. We don't like titles, so we call ourselves like core builders of Stroom protocol. Stroom protocol is a Bitcoin liquid staking protocol in Lightning Network. And in order for you to understand what it is, I need to define the staking part and why it's liquid. And in the next couple of minutes, I may sound to you like old-fashioned grandpa because I'm going to tell about you to talk about the layer 2 on top of Bitcoin. So Lightning Network, long ago, was introduced in 2016 as an off-chain network of payment channels for scaling Bitcoin. So channel has 2 participants, and in order to, if you need to transact with a lot of parties, it's not feasible in terms of on-chain fees to open a channel with each of it. So there is such a thing as a routing node on Lightning Network. Basically, it's like a well-connected node with a lot of channels and a lot of liquidity locked in these channels that allows you to transact from A to B, from B to C, whatever. And routing nodes take cut from each transaction they wrote from A to B. And this is resemble in some way APR. And in order to be efficient routing node, you need to actually lock liquidity so you can think of it as a stake. So you need to stake liquidity into Lightning channels to actually be able to route, and you will have the APR. And that's what we allow to do. So Stroom will allow you, Bitcoin holders, retail, institutional users to actually deploy liquidity to our routing hub to generate APR. So we will distribute all of the routing fees among our depositors. And why it's liquid, that's another part of the story. While your Bitcoin is inside our routing node working for the routing transactions, we will issue you a derivative on Ethereum, which is ERC20 token, the same thing as WBTC. We call it LNBTC, so it's Lightning Bitcoin. And you can go and use it in DeFi in whatever way you like a collateral and lending protocols, or like a liquidity for IMM pools or Uniswap. So that's the basic things about liquid staking on Bitcoin for Lightning Network. Awesome,
thank you. Yeah, let's please go ahead, Fisher.
Yes, sir. Hello, everyone. My name is Fisher Yu. I'm the CTO and co-founder of Babylon. So Babylon is a layer 1 project that extracts the security of Bitcoin and share it with the POS world. So we are currently building a brand new protocol called Bitcoin staking, which turns Bitcoin, the asset, into a first-class staking asset that can be used to secure any proof of work system, including layer 1 POS chains and layer 2 decentralized infrastructures. And most importantly, this staking is trustless and non-custodian. That means the Bitcoin holders does not have to send their Bitcoin to any third-party wallet.
Yeah. Cool. And then Engin, please go ahead.
Hey everyone, this is Engin Erdogan. I lead tBTC product at Thesis. Thesis is a venture studio building Bitcoin projects such as tBTC. tBTC itself is a trust-minimized, permissionless, open-source bridge for Bitcoin to pretty much any chain. Currently, we are live on 7 chains. We have over 50 million in TVL, so it's a live product. And as for staking, we are building a liquid staking offering upon tBTC. So ask me anything.
Awesome, cool. So I tried to summarize this in one sentence. We have the liquid staking protocol, essentially locking Bitcoins, running Lightning nodes in the background. We have the approach of Babylon with a shared security model where Bitcoin security is shared to proof of stake networks.
Yes.
And we have the, a well-known bridge from the Bitcoin blockchain to the Ethereum and many more chains and vice versa. Cool. So let's talk about the elephant in the room, yeah? So you're talking about Bitcoin staking, and we know that there are some cultural differences in the Bitcoin community and in more, let's say, innovative open communities, Ethereum, Solana. I would like to address the Bitcoin maximalism and the staking opportunities that you guys are offering. Yeah, how do you navigate these challenges that the Bitcoin community has a large holder base which see some value in holding the asset and not doing anything with it, and are rather critical on the staking opportunities? What's your opinion? Maybe Engin, you start.
Sure. From a product and go-to-market perspective, I actually find this characterization of maxis and maximalism a little bit limiting and problematic, right? Because if you look at Bitcoin spectrum at large, it's actually much more than the maxis. There are so many more colors in the ecosystem. I mean, it's true that there's a loud minority that has like a pretty strong stance against any utility, not just staking. But then there are people who are using Ethereum DeFi and hold Bitcoin at the same time. There's WBTC. There are people who are holding their Bitcoin on exchanges. And then there are other types of stakeholders. There are institutions, there are miners. So when you look across the board like this, it's very difficult to reduce Bitcoin as a market to just maxis. I think the main question for us, and the thing that we think about, is that what is our market beachhead, where you start with, right? For us, the important part, the starting point, is the least resistance path, and that is like people who already use DeFi or Ethereum to a reasonable extent, and at the same time hold Bitcoin. I mean, WBTC actually is a good rubric for this. Like, if you look at it, it's like a $6 billion market, right? That's a pretty good start. Let's start with that. Let's land in that beachhead and consider what the adjacencies are and move forward. That is the approach that we're taking.
Cool. Fischer, do you have an opinion on that?
Yeah, I totally agree that there's a very wide spectrum of BTC holders. The maximum is just a minority. Yeah, one. Okay. In terms of holding, so Babylon's BTC staking protocol actually does more than just holding. We actually ask the Bitcoin holders to lock their Bitcoin on their wallet for a period. So this is even stronger than holding. So when we talk to BTC maxis, they don't have any thing against our proposal. So from this part, I think we are good.
Okay. How about you, Nick?
Yeah. So actually, I mean, Bitcoin maximalists are very toxic only on Twitter. In real life, they are pretty open-minded people, and there are two red flags that they don't like. If you are going to change the underlying protocol, they don't like that, and then they won't accept that. And yeah, so that's the main one. And if you don't misuse the block size according to their beliefs. So they were against putting a GPEX on Bitcoin back in 2014. There was a historical first war in the Bitcoin community before block size war, which is called op return war. And they actually won that war against the counterparty. And a lot of community members then were not expelled, so they left the community and actually built some stuff like Ethereum. But right now, there are protocols like RGB and taproot assets that allow you to actually issue assets on Bitcoin and bring some DeFi mechanics. And Bitcoin maxis, they're pretty good with that because it does not misuse any block size, and it does not require any change to the underlying protocol. It uses client-side validation, but it's like another topic. So they're good with my project as well.
Okay, cool. Yeah, I think we have seen some activity in the Bitcoin ecosystem with the ordinals NFTs. that the community is open for experimentation, even on Bitcoin, with native assets on Bitcoin. And then, yeah, any other next step away from the main chain introduces additional risk. Yeah, this is the next question I would like to ask you, is how to minimize risk, how do you handle risk considerations, or yeah, what is your approach to tell the Bitcoiner your asset is as safe as possible? Maybe start with you, Nick.
Yes, so we actually run a federation, so still under development, but our project is federated. And so federation controls the routing node, all of the channels that we open in Lightning Network. It also controls the bridge from BTC to Ethereum. So I like the term trust minimized liquidity provision to Lightning Network. So you still need to trust federation, but it's like, it will be like we will have many members with a reputation, and it's better than trusting a single entity. And in our case, you will have APR in a native Bitcoin. That's how we handle the security, the federation thing.
And how about the operational risks, like running node? Is it possible to get slashed, for example?
Yeah, that's correct. So if you run your own Lightning node, you can be slashed if you go against your channel counterparty. So actually, here you are more safe if you delegate to Stroom routing node, because we do it in a professional way. Our node is 2 years old, so we we have our custom algorithm to be like 100% uptime and most capital efficient that we can.
Okay, and short follow-up on that. On Bitcoin, you don't have a smart contracts with EVM. How is it possible to delegate to Stroom node?
So that's the technical question, but actually, from a user perspective, you will send a regular on-chain transaction to the address, which is a multi-sig. And yes, so federation actually multi-sig. Yeah.
All right, that answers it pretty much, yeah. So Fischer, how about you? What are security approaches in your protocol?
Yeah, so like Nick just mentioned, Bitcoin maxis prefer like the protocol to stay in a, don't change it, right? So Bitcoin actually have the scripting language that is very simple but very robust. So Babylon utilized the most basic scripting functions of this very basic scripting language to construct our protocol, so that it only involves time lock and signatures, so that from the protocol level, it is 100% secure and it's trustless. So the security risk of the Babylon's BTC staking protocol is reduced to the operational level that you just asked about. So we actually collaborate with key management companies and security audit companies to make sure at operational level there's no misuse or human mistakes that can cause accidental slashing. So at both the theoretical protocol level and operational level, we achieve 100% security.
Okay, and you mentioned there is slashing in your protocol as well. Could you maybe give an example? What could be a slashing reason?
Yeah, slashing, okay. What is POS security? POS security means you pledge your token to become a validator. So, and if you attack the POS chain, your pledged token can actually get slashed. So slashing is actually the foundation of POS security. So with Babylon's BTC staking, so when you lock your Bitcoin or Bitcoin chain, you become a validator. And if you attack the POS chain you validate, then your Bitcoin on Bitcoin chain will magically get slashed. So this is the slashing we're talking about. So this is a very standard POS slashing scenario.
Okay, and how is an attack identified? Like, is it downtime or is it like double signing? Like,
Yeah, double signing is a safety attack, so it should be slashed. Downtime is like a liveness issue. It may not be an attack. Okay, so liveness is not slashable, and you shouldn't be slashed.
Yeah. Okay, so that pretty much sounds like a consensus protocol. The participating validators are running, and there are very similar mechanisms of slashing that we have in the underlying proof of stake.
Yes, exactly. So what we do is to make Bitcoin, the experience of staking Bitcoin, exactly the same as staking in any native POS chain.
Oh, cool. That's a great summary. Yeah. And then, yeah, Engin, how is security approached in the tBTC protocol?
I'll go back to the spectrum, right? So I think just thinking about risk profiles, like there's no typical expectation of security or risk management as far as we see. If you look at the Bitcoin ecosystem right now, I believe like about over 10% of Bitcoin is still stored in centralized exchanges. I mean, that's one type of risk appetite. And another type of risk appetite is like if you're doing, cold storage and, your keys, your tokens. So everything in between, our guiding principle there is that we try to obviously prioritize security and extend with utility. Specifically in terms of staking, that means prioritize capital preservation and extend with capital efficiency, right? As for technical infrastructure, we lean on the tBTC infrastructure that is run by Threshold Network. So a few pieces about that is that Threshold Network is originally established by the merger of two cryptography protocols, NuCipher and Keep Network. And over the years, it actually grew into a federation of staker nodes that are running the network with a lot of interest in it. This includes like top crypto projects and individuals as well. So you can think about that part of the network like a future state of Stroom, right? That is currently live and working. I think technically we have a lot of interest, like over hundreds of people want to run the network as stakers, but we have this slow unfolding strategy that we call Beta Stakers Program because it involves a fair amount of operational sophistication and technical knowledge to run these nodes. We actually have a particular criteria for whitelisting initial stakers as part of Threshold Network to admit into that Beta Staker program. So that program is growing, and that can, you can kind of like think about that as like our journey through the progressive decentralization.
Cool. Okay, so let's say I'm a Bitcoin fan. You convinced me there is something to do here. The risks and the security is considered. Now let's talk about a little bit about what can I do, what can I earn, what are economic incentives. I would like to start with you, Engin. What can I do with tBTC? Why would I do it? And yeah, maybe just give some examples which you think are interesting.
If you look at the ethos of Bitcoin, you kind of like keep hearing the same type of terms. Like you kind of start seeing these patterns of generational wealth, financial freedom, sovereignty, compounding, stacking, like these are the things that we keep hearing, right? Inherent in all of these phrases is like the same type of user expectation, which is growing the value of your assets, right? When the market is up, that's kind of like happening by itself. But when the market is not up, we still have that expectation. That's an inherent expectation. So staking as a utility actually fulfills that expectation, right? So it's, for that reason, it's actually a good fit with the Bitcoin community. It doesn't matter what you call it. You call it interest or earn or stake or yield, right? The tricky thing is that some of those terms evoke allergic reactions because fundamentally Ethereum culture and Bitcoin culture has slightly different takes on how they implement these type of compounding, right? For Ethereum, there's a higher tolerance for experimentation at the protocol level. That is very different in Bitcoin. So that's our consideration. We are very careful about not mimicking what happens on Ethereum verbatim on Bitcoin. So we strive to create a native Bitcoin staking experience. That's our goal. That's our North Star. Okay? But primarily, earning and growing the value of your assets is the guiding principle. Now, when you talk about liquid staking, there are further utilities, right? A liquid staking token, can be used, say, as like collateral in secondary markets. I think we don't want to go there immediately. We want to take one step at a time, but ultimately, I think we will all head toward there.
Yeah, cool. So basically, you're saying everything that can be of economic incentive on the Ethereum side, users could expose their tBTC to. I remember back in the days, I was a pro Bitcoin, pro Ethereum, so the only real thing I did was liquidity provision for the ETH BTC trading pair on Uniswap. This was very early in the days, and it's a good option for people that hold the underlying asset, price appreciation of the asset, if they believe it, and then do some additional yield on top.
Yeah, and I'll add one more thing. I mean, one thing that we often overlook with any type of these experiences, because of the technical sophistication and the underlying complexity, results in really difficult to use type of products. So I would say that that's like one of the things that we take into heart, is that we are market first, user, stakeholder first type of operation. Like, we do a lot of research, we do a lot of validation. We want to make sure that, you know, we abstract away the complexity of what we put together and inform the users at the same time while we are offering these utilities. So that's kind of an important attribute for us.
Okay. So Fischer, tell us about the security, the shared security model. What can people essentially earn economically on this approach?
Yes, so with Babylon's BTC staking, the BTC holders will use their idle Bitcoins as a staking asset for POS chains. So they will earn the native POS chain tokens as the yield. Yeah.
Oh, that's a very short and concise answer. So you get the basically the inflation of the protocol, the transaction fees, whatever comes with the revenue, and you would earn that using the protocol.
Yeah, so you take a cut of the POS reward. So most of the POS chains, the bigger chunk of the reward is inflation, a smaller chunk is the transaction fee.
Awesome.
Yeah, so eventually, so what we imagine is we provide Bitcoin holders almost risk-free yield generation opportunity, such as similar to US Treasury bond. Yeah.
Okay, got it. And then, Nick, you mentioned that there is a native Bitcoin APR that's probably very interesting for some of the Bitcoin holders. Tell us more. What can users expect?
Yes, so our economic incentive in Stroom and overall Lightning node, not only Stroom, but every Lightning routing node, comes from a real Bitcoin utility that is there to transact with, to make payments. It sounds weird, but a lot of people make payments via Lightning Network. And if you're talking about some numbers, so the APR, the economic incentive itself, depends on the traffic that your routing node has. So if you are well connected, you have a lot of channels to write peers, and you know how to attract that traffic, probably. And if you're traffic focused and if you're yield focused, there are nodes that can earn up to 5–6% that I know personally, but I won't say it's like very stable APR. So if we would like to be more conservative, I think that main routing nodes on Lightning Network can make 1–2% in native Bitcoin from Bitcoin native utility, and in our case, on top of that, you can do some additional yield on Ethereum using our LNBTC in, for example, AMM pools. You will earn swaps fee, right? And you can lend this LNBTC to borrowers if there are any borrowers. But it's opt-in, so if you're a Bitcoin holder and you don't want to touch Ethereum, don't touch it. You have a Lightning part, and if you're great with that, that's great.
Cool. Yeah, I think you guys are really building the bridges between the Bitcoin and the Ethereum communities. That's really cool thing. Let's talk about a little bit about the technical challenges. Bitcoin is known for the, let's say, rather slow and conservative protocol upgrades. Some critics say, okay, there's an update every X years compared to Ethereum, Solana, whatever, which is upgrading much quicker. Also, there is no smart contract or a basic script language, but not a EVM kind of style smart contract language available. What was your experience in building on top of Bitcoin, the challenges and how you have overcome these? Maybe we start with you, Fischer.
Yeah, technical difficulties. Yeah, it's the simplicity of the Bitcoin scripting language. It's so limited that that's not much you can do with that. So for slashing, so we figure out the way to make equivocation or double voting to be slashable. But for other type of slashable events, there we need a lot of more research to see how we can make those slashing events slashable using Bitcoin scripting language. So this is one big challenge. Another big challenge, technical challenge, actually comes from the regulation challenge, where the stakers and the validators relation. The validator should not be able to pick which chain to stake to validate for on behalf of the staker, because otherwise the validator become a financial service provider or an investment agent. So how to impose that the validator cannot make decision for the staker and give back all the decision power back to the staker is also a big technical challenge. So we managed to solve it just very recently.
Wow, so you managed to solve this, and can you outline how the solution looks like, maybe a very high level?
So the staker will have all the rights to choose which validator, and each validator can only validate one chain.
Okay, cool. And you mentioned in your earlier explanation the simplicity of the script language can sometimes be useful because it's very pure and easy.
Yeah, it's a two-sided blade.
Yes, right.
Robust, but very limiting.
Yes, it's what you make out of it, right? The tools are there. Yeah, Engin, what is your approach on the technical challenges?
Are you sure you want me to talk about technical challenges?
Maybe
I can't take over the whole hour.
maybe pick the biggest one and
okay.
try to explain it in a minute or so.
Got it. Yeah, I mean, there's a lot, right? There's the technical challenges of running the infrastructure together with the threshold network DAO, and in terms of the staker nodes and the technical requirements there. But let's put that aside for a second. That's like network level, protocol level stuff. There are technical challenges at tBTC. The implementation of tBTC, I wouldn't call them like unpredictable engineering challenges, but more the way they manifest as like how they reflect to the product. So that's, we want to create, again, a good experience for the users and a reasonably simple experience. And we have all this complexity happening in the background. Like, how do we balance that? I would say like that's one of our big challenges. I mean, if you think about the flow of Bitcoin through tBTC, you're depositing it into this federation of signers, and then there's multi-party cryptography, multi-party computation and threshold cryptography, and there are ceremonies, and then that turns into an ERC20 reference asset that can actually be going to L1s or L2s or non-EVM type of networks. You kind of like think about this type of flow, and we are now adding the staking part of it. We don't want people to just like experience every step of this process. It would be painful, right? So abstracting away successfully so that these transactions are relatively simple, but also reasonably self-explanatory. I would say that that's the main challenge for us.
Wow, that's interesting. So the main challenge is UX standpoint, and you mentioned the multi-part computation as it would be some easy stuff. That's quite impressive. Nick, what is your approach on the technicalities?
Yeah, so I think that simplicity, of course, is a feature of Bitcoin. I believe that we face similar challenges with our bridge part in the federation as tBTC. What is like a native challenge for us is a Lightning Network part, because we need to actually implement federation into inside the Lightning Network. It is possible only with Schnorr signatures. And that's why we're still waiting for Taproot-enabled channels to emerge. But everything is ready. It's already there. Just need to activate, and there we go.
All right. Yeah, thank you very much. I think we reached the end of the time of the discussion. Thank you again for building the bridges in the different communities. And give a big applause for our guests.